All right, what's up, everybody? This is Evan Carthy from evancarthy.com. It is April 20th, 2020, historic day in Ola markets. We're going to go over and also touch on SP 500, see what's happening and what we can expect moving forward. So first off, we'll start with SP 500. You can see right here we are looking at the 1 minute chart. We're in a couple of short setups right now. Let me explain them here real quick. So let me delete actually this stuff real quick, show you how we got there. So first off, we're in a 15-minute short setup right here, going from that high to that low right there. See, it came up, hit the 50% retracement level perfectly. So this is a very formulaic trade right here. The program's running this. Came down, took out the exit right there. So now we just come up here. There's a new high. Draw that down to the new low, and that's current setup. We're in the 15-minute chart for the S&P 500, so definitely looking for some more downside to this for this setup right here. The way I trade this is price comes up and touches the 88.6. I consider that the line of no return. That's when I consider the move to the upside to be over, or excuse me, move to the downside to be over. So definitely I'd start looking for longs right then. And then down here you can see this orange line or excuse me, this gold line down here. One of the things I've been looking at, I noticed that this it's a 2500 EMA line right here, and so again I use it for a reference point for it on the market, because a lot of time when the price comes up towards this level, you can see it does usually have some action towards it. So it helps me to try to stay on the right side of the market, stay long and above, short going low, not always, but then also when prices come up, definitely look for some either Fibonacci retracement levels, some Fibonacci extension levels to help correlate with that and see if we will get some further either resistance or support from it. So that's what that's used for there. So definitely if price continues to go down lower here, then definitely look for something to happen around down here at the 2500 EMA line, which currently is about 27.20. So that is the 15-minute chart that we have right there. Let me show you the 1 minute because we have a similar short setup that we are in right here. It just came down from a little bit higher up here. So starting up here, here's the high. Come down here. There is the first 50 back trade right there. Came down, hit the target perfectly. And then one thing I've noticed is that when you're getting these swing changes or these trend changes for it, what I call it a double tap, meaning instead of normally how you would take this is the next one you'd start the high right there, take the low back down there, and then you can see price never came back and hit the 123 Fibonacci extension level, came out and took it out. So what I've been doing for this is, instead of doing that, especially when we're looking at a swing, excuse me, the first move off of it. So you have the first one right there, goes into it, hits a 50% back, hits 123.6. So I consider this, I call this a double tap. So all you do, you leave the swing high alone, keep that the same, draw the swing low down to the bottom until it comes up and hits 50%. And here it comes up, hits 50, 61.8, never hits 78.6. Then comes down and completes the profit target right there. Let me get this green box out of there for you. I'll get this yellow one out of there. I'm talking about it. And then from there, you can decide what you want to do. Do you want to continue to take this a traditional one for it, or do you want to look for an extension? It did go down quite a little bit, and it did have an extension work for it. So you just kind of have to, decide what works best for it. It's kind of um, basically where do you think fits best right here. So in this one right here, the traditional fit best, came back up, hit the 50%, came back down right here. Now, when price goes this far down away from it right there, this is going to be an extension move right there. So we use the previous low for it. Price comes back down, use that low for it, comes back up, hits at 50 to 61.8, comes down, hits target. So then all you do is when you are in an extension trade, you just move the low when you're going lower, or if you move the high anchor point when you're going long for it. So we'll just move back down, see until when it comes and hits the 50% level. So using that low right there, price comes up, hits a 50 to 61.8, and then look at this. This is how you know you are on a correct level when price just barely grazes the 123.6. completes that setup right there. So again, what we do, we just keep following it lower until it finally breaks back up. And again, what I consider the trend to be over when it hits the 88.6 level right there. A lot of people consider it the 61.8, but just the way I've seen so much trading going on, I've seen plenty of time price hit the 61. Excuse me. Yeah, hits the 61.8 level, Fibonacci retracement level, and even the 78.6 level, and then continues to trend down lower. So that's just like this current point in time in my trading journey. I don't consider that to be the trend over. I wait for the 88.6 to get hit. So you see here, price can go up, made uptrend up, hit the 78.6, came close to hit the 88.6, didn't hit it, and then just took off down lower, hit the 1.236 level, and now we just take it down lower once again, just keep following it down. So that's where we're currently at. We're currently waiting for this short setup to start right here, and the initial area we'd look at was for price to retrace back up to about 28.0550. Then if it does that, then the exit we'd be looking for down here would be about 27.56. So based upon the 15-minute chart and also the 1-minute chart right here, I am looking for some more downside to the market, at least in the overnight, the early morning session. Then after that, we'll have to see what happens for it. Now let's look at the longer term time frame right here. I know I've touched on this in some past videos for it. Get this thing out of the way. So what we have right here, this is an extension trade Fibonacci level, and you see price came back down, and this is using the weekly time frame for it. Price came back down, hit the 50% Fibonacci retracement level in between the 50 and 60.1. It's bounced off it perfectly. So if this setup does go to completion for it right here, we're looking at a target exit of around 30, say about 3870. Yeah, about 3870, 3,870 in the S&P 500 for it. And again, this is using the weekly chart. Let me go to the daily here real quick because I want to show you that we really are not in any short setups currently for it. So using this swing high down to that swing low, see price came and hit the 50%, came down here and hit the exit. So we'll just use the traditional way. We'll start going lower back down here. Price made that low. Which one was it? Let's see. Yeah, it's this one right here. Excuse me. Price came down here, made that low. Moved back up. Where was it? You know, it's using off the extension. So this will work right here. Excuse me. No, I was using the. Sorry about that. I was using the extension level off of it right down here. Just because, as you can see, price just moved far away from the 123.6 and the 1.414 level, moved far away from it. So what I decided to start using is the extension rather than using the traditional movement back down. So as you can see right here, price came back down here, made that low, opened up, opened up right about there, came back up, that initiated the trade right down there, came down, hit that setup, so then we just keep drawing it down lower. As you can see, last week price came up and hit the 88.6 level to violate this short setup. And one thing I look for when a trend gets broken, and this trend to the downside was broken, what I look for a target for the other way is in between the 1.236 and the 1.414 Fibonacci extension level going the other way. It's just a target area I look for this move to go up to. Now, of course, the move can continue to go up higher than it, and it may not even hit it altogether within this move right here. But just one thing I've noticed is that when a trend does fail, I do measure it the other way based upon the failure for it, and that's a target area we're looking for this move to the upside right here. So that's why I drew that box right there. So then moving on to the upside right here in the daily chart, the S&P 500. To be honest, we haven't had a 50% retracement come back and hit. Now, in hindsight, this may be right here. It just may be front run before it hit the 50% level right there. But currently, technically, we haven't had it come hit for this thing to get set up. Sometimes in super high trending markets, you won't get that hit, and it will come up. So assuming that this is a legitimate 50 back extension, 50 back retracement trade, it's just gotten front run for it. We're starting to get close to looking at making this an extension for this next one, moving up here rather than the traditional from right here, just because price is moving up north of the 1.41 for Fibonacci extension level, but still just waiting for it to confirm. So I'm not sure at this point in time what it is. You can see though, even though the market has gone back down the past 2 days, it's kind of a good thing it did, because this gap right here came back, or excuse me, the gap between this and this. Now this isn't necessarily like huge gap between the wicks and everything, but there isn't any bar. It's not a bar to bar one, so this did come back and get filled today for that. So if looking to be long in the market, you definitely want to see that come back and get filled, which it did initially. And then how the one gap that we do have up here is near the very high up here, true gap, from about 33.2875 to about 33.1375. So definitely looking for that to come up, get filled. And then finally, let's go look at the VIX right here. Here we can see here in the weekly chart, you have none of these kind of minor gaps as far as there's no body fills, it's just wick fills for it here in the weekly chart. So personally, I would like to see more negativity in S&P 500 in the short term for this to come up and get filled, and then it move in here back down more, because the VIX has an inverse relationship with S&P 500. So when the VIX is going up, S&P 500 is going down, and vice versa. And then because we are currently in a short setup for the VIX, which makes it bullish for the S&P 500, because you can see, I think it's in the daily chart. It's the one it's in. Yeah, it's in the daily chart right here. You can see here you have the high, price came down, came back up, hit between the 50, 61.8. So currently the exit we're looking for down here is going to be about 24 or so there in the VIX. And then one thing to note right here, both on the daily and the weekly chart, we have this huge gap right here that I made this red triangle go in between right here. So I am looking for this to come back and get filled as well, and it would fit perfectly within, let's get this thing out of there real quick, within this short setup in the VIX to come down here in between that right there. So that's what I'm looking for in the S&P 500. I'm looking for more upside in the mid to long term, but in the short term, I think we can definitely see some more downturn in the market. But once this comes and gets filled here in the VIX, then we'll have to reevaluate and see what's going on. But that's what I'm looking for, is more upside in the S&P 500, which would cause this short setup in the VIX right here to come back down here and get filled. Now, real quickly, let's go over here and talk about oil here real quick, because we had a historic day in the market today. You can see down here, there's a couple super long-term that were short setups, or to the downside setups, long-term short. Yeah, it makes a lot of sense. But anyways, one thing I didn't realize is that apparently in the light crude oil futures market, you can go into the negative territory. Here on Zero Hedge, they talk about this. I think it took a lot of people by surprise. The CME market, the futures market, said that the oil futures can trade in the negative territory. So I didn't realize that was a thing. I thought zero was the floor for it, and it traded in the negatives. So one of the theories, the reason why or how that even happened, was that one major player out there blew up their account today. Let's see where they talk about it right here. Where is it? I think it's up here. Storage capacity, and that's that. Yeah, here it is. There was a lot of chatter that a fund blew up here as the rational forced selling in the front month, sending the prompt spread to a stunning $60, suggests at least one major player was buying the dip on the spread and was obliterated today. So that's what makes the most sense of the reason why you had this just another historic drop into the negatives for oil. Otherwise, it didn't make any sense. So that's the best thing I could figure out of how and why that happened. Just some hedge fund obviously got on the wrong side of this and just got literally obliterated today. So, but what it did complete this super long-term weekly chart to the short side. A couple weeks ago, I did a post or a video just saying that how I think oil is headed under $10 a barrel, and sure enough, it sadly did that today. You have this super long-term short setup. You also had from this to this one right here. You can see that one here right there. So I mean, basically every short setup, basically every short setup that you're looking for to the long-term downside. Got hit today. One thing that it does do though is if you're using that traditional setup, there you see that one got hit, and then taking this swing high right here and taking this all the way to low because apparently it can trade in negative territories. So who's to say it couldn't go into the negative $70 territory next and hit that one? So we'll just keep on following down lower for it. And again, this is the weekly time frame, so we're going to have the super long term. But with this move down here today and then the retracement back up to it, it is currently in a short setup. It came back and hit the 50% at about $18.17. And basically, if you weren't aware, oil futures contracts they trade month to month. So the May contract, it on the 3 business days before the 25th, that is when the contracts expire. And so people are all exercising them, getting out of them today, and even more so because no one wants to hold on to this stuff. Rolling over into the June contracts to switch over to the June. So that's why the May was crashing so hard, and then all of a sudden you have this huge recovery because the June contracts were showing around $21 at the time when the May contracts were going into the negative territories. Everyone getting out there, and more than likely, as just saw a little bit ago, there's some major player out there that got obliterated today, which caused that huge move down. But it completed all those long-term short setups in one day. So I mean, it's just what a time to be alive. This is insane. I mean, this is literally history that we're living in right now. So pretty crazy, but pretty cool at the same time. But anyways, in the weekly long term, we are in a short setup for oil right here. So yeah, apparently can't go negative. So the next target we're looking for here in for oil would be around negative $68 a barrel. Not sure how that works, but whatever. If you go to the daily right here, again, not much difference right there. You just see that huge move red candle down there today. And that's basically all you can do right now is just wait and see what to expect moving forward with oil. Probably will be some more downside, just the way the coronavirus has shut down the global economy. No one's buying any oil out there, so therefore running out of places to store it. But anyways, that's the S&P 500. That's crude oil. Be safe out there, and I'll talk to you soon. Thanks. Bye.